Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, so let's keep going with our gold analysis. So recently we have suspected that market could go higher, especially on the performance that we saw on interest rates, on 4-hour time frame chart of the gold, and in general this suggestion was correct, and market was able to show a bit higher type of action. So on the daily chart actually we do not have something really new. Trend still stands bullish. Overall dynamic here stands in a row with the bearish trend on the weekly chart. So currently the combination of the two time frames, on the weekly and the daily, looks so that the daily bullish trend is faded against the weekly bearish trend. So this upward action stands very accurately as a retracement on the weekly chart, and doesn't break the trend. And that might be the reason why later market could show some deeper downward action. At least currently we can't exclude it totally. So on the intraday charts, there's a few moments exist that we need to talk about. First of all, let's take a look at the interest rates today. You could see slightly minor downward action stance on the 10-year yields. I think that hardly will make an impact on the gold market by far. It's mostly calling in the same area. The one thing that might be supportive to the gold is the same factor as on the euro currency. So recall what we said about the dollar index. In the dollar index we have the bearish pattern. It suggests that dollar could drop a bit more in the nearest time, and that will be supportive to the gold. So while gold is dropping, while dollar is dropping, hardly we will see some strong acceleration on the gold to the downside. Well, currently the gold and the dollar is losing the correlation. So previously it was more correlated assets. Currently gold looks more independently, moving more independently, and maybe this will change. I mean, that's maybe gold will show some strong action, but normally when the dollar is dropping, you'd not suggest that gold also will be dropping fast. It's just because it trades against the dollar, and weakness of the dollar supports gold. So, once this retracement will be over, the market could show the acceleration, and we could consider this type of action. So, on the 4 time frame chart, you could see that our suggestion recently was correct, and grabber that we have seen here indeed leads market above this top. So grabber target is completed, and as we said, we could get the greater guarded steeple to sell, and it now stands in place. So the background for taking the short position on the gold market here is completed. The minimum target of this pattern is 30% retracement of the whole upward action. So here's gold might go slightly lower. So if you have taken the bearish position based on this pattern, based on this setup, now you could move stops to the break even. Potentially, if indeed this will happen with the bearish trend that we have on the high time frames, we could get this type of action. So it might be straight downward continuation. But since dollar right now is also dropping, let's consider first a bit smaller scale, such as we have on the hourly chart. Here we do not have some clear bearish reversal pattern inside of it, but indirect signs shows us that market is look a bit weaker and look heavy. It's just because it's trying to challenge the 618 resistance level that previously we traded here when taking the short position. This XOP was our first guarded steeple to sell, if you remember. And here is definitely you could see the attempt to break it up, and all of these attempts have failed. The market now is showing the pullback. All things that we have is just two grabbers on the top, suggest that taking out these lows, and market mostly is completed it. So for a shorter term scale target, let's consider first this consolidation, like the flag or channel, where market first could drop back to the bottom of the flag. It's approximately 1775 area. So this will be approximately the 30% of the garage stipulated to sell. If market starts breaking it down, then it means that we will go to some extension. Either return back to the lows at least, somewhere to back to the 1770, 1765, or potentially we could get even this garage stipulated AB equals CD pattern. So the consequence is as follows. So first we are watching for flag and the lower border. In the case of the breakout, we are watching for the lows as the next destination point. And then, final, this will be this one. So with this pattern on the back, currently we do not consider the taken long position by far. And with the price action that we have currently. So only if market will later turn up and break this consolidation to the upside, starting move back to the top, that will be the bullish sign. That could suggest that indeed we could get upper breakout, because currently all this type of action stands in a row with this some kind of the huge bearish engulfing pattern. So a pattern has been formed, market shows retracing back inside of the body of the pattern. Now theoretically it might be the extension down, and we should be ready for that. We could argue about the destination. It could be minimum, it could be more extended, but currently this setup stands in place, and it will be cancelled only if market will take it out of this top and break the flag to the upside. So those who have taken short position here, the points that we have specified now need to move stops to the break even. Others, if you do not have the position, you need to make the decision. Either you will also will be considered taking the short position here, or if you have the bullish view, you just need to wait when the market will confirm its bullishness. So market has to erase this bearish stop that stands right now in place. Before this will happen, it's a bit very tricky and risky trying to anticipate it and take the long position in advance of this moment. So this is our view currently on the gold market.